Right, welcome guys, welcome back to my channel. Right, today I want to carry on to proceed with what? With our topic trial balance. With our topic trial balance. On my previous video, we did cover how to prepare a trial balance. We also did errors that do not affect the agreement of a trial balance. We also did errors that affect the agreement of a trial balance. We did suspense, we did journal entry. Right, so in today's video, I want to explain this party to correct the net profit. The unadjusted profit is 13,000. This is another challenging part when it comes to trial balance. Most of learners, they don't know how to correct net profit after some certain errors. Right. So I want to use the same errors that we did on the previous video, where I was explaining the concept of suspense and journal entry. I want to use same example to do this part of correcting net profit. That's how you can see the link. That's how you can understand that. Because remember, in real exam, they can also use same question. They will give you transaction like this errors. They will say prepare the suspense, prepare the journal entry, and correct net profit. So I'm also going to use the same example to correct net profit. So what you need to know and understand before you do anything, for you to be able to answer this type of question, remember I said my goal is to make accounting easy. So the only way to make accounting easy is to come up with techniques, different approaches, right? Unique approaches, unique techniques that you cannot even get in any textbook that you might think of accounting. You cannot get these techniques. So these techniques, I'm telling you, and believe me, you can only get them from my textbook, right? So for those with my textbook, for those who already purchased my textbook, please go to page 88. That's where you can get this topic trial balance. So if you check that textbook, we are going to see that there is an approach that you can use to correct the net profit. So for you to correct the net profit, what you must do, you must know the relationship between. So we are saying you need to know the relationship between net profit. This is net profit, right? These are debit items. These are credit items. Right. So for you to be able to answer this type of a question of correcting the net profit after what? After errors, you need to understand this. So I am saying, you need to know the relationship between debit items with net profit, credit items with net profit. When I say debit items, I'm referring to those accounts that we post on the debit side in the trial balance, like what? Like purchases, right? Like all expenses, right? Then credit items such as what? Sales, such as what? Such as income. Remember, I'm saying with the net profit. So obvious, when I say net profit, when I say debit items, a relationship between debit items with net profit, I'm only referring to those debit items that we include in the income statement, not those debit items that we don't include in the income. Because remember, net profit, we get net profit from the income statement. So we want the relationship between debit items that we put in the income statement and credit items that we put in the income statement. Those items that we don't put in the income statement, it means they don't have a direct relationship with the net profit, right? So the relationship goes like this. All credit items that we put in the income statement, they have what we call direct relationship with net profit. They have direct relationship. What do I mean by saying direct relationship? I'm saying when these credit items, when they are undercast or understated, let's say they are understated, right? Net profit will do the same because of direct relationship. Will do the same. It will be also understated. But if credit items are overstated, then because of direct relationship, the net profit will be also overstated. Because there is a direct relationship, it means what happened here, that is very action will also happen here because of direct relationship. But it's now different with debit items with net profit. Debit items with net profit, there is an indirect now. There is an indirect what? Relationship. Meaning what? Meaning if debit items are understated, net profit will be overstated because of indirect. So the net profit will do opposite, will be overstated. But if debit items are overstated, net profit will be understated. This is the relationship, this is the technique, this is the approach that can only help you to answer this. Without this technique, forget and smile about getting correct when it comes to this topic, when it comes to this question. And if you check past papers, this part dominates very much. There is much dominance of this part in all past exam papers. So there is also a possibility that you are going to see this part in your final paper that you are going to write. So for you to prepare this question of correcting net profit, you need to know this technique, this part, this concept of the relationship between credit items with net profit, debit items with net profit. So once you understand like this, it now depends with the type of the question that the examiner is giving you. That's also that's where most of learners also fail, because you just rush to answer questions without a deep understanding of the question. They can ask two different types of question here. So you need to pay much attention when it comes to the question type. So what they can say, they can ask you the effect, only the effect. Like what I said, that debit item was understated. So what is the effect to net profit? So the effect will be overstated. If debit items are overstated, the effect to net profit will be understated. That's the effect, right? If the credit item is understated, the net profit will be also understated. That's the effect. The effect of credit item overstated, net profit will be overstated. That's the effect. That's one type of the question that they can ask you, the effect. So the effect will be understated or overstated. Then another question, which is the common one, they will ask you about the correction of the effect. That's where most of the learners fail. Ipapo. Because iwo unongo wakadzidza kuzi wakanzi nase Ronald. Saka tiri kuti isusu when debit item is understated, net profit will be overstated, hence you need to subtract. Ndozvo wakabata zvega izvozvo. Wakungoti waona question of wafara kuti yes, zvinodziona seRonald zvauya. Wakutonyora izvozvo. Iwe dzikamisa hana yako. Hatidi munofuira achiziya. Tanga watarisa kuti question iri kuti chinyi first. Is the question requiring you the effect or the correction of the effect? So the correction of the effect will be like this now. If debit item is understated, The effect, we are saying net profit will be overstated. So what is the correction of the effect now? What can we do to correct the net profit? So if net profit is overstated, to correct, subtract. That's now the correction. So you need to understand the sequence. So in summary, we are saying, I'm saying this, right? To debit item, these are debit items, these are credit items, right? So we are saying when debit items are understated, right? Understated. So here we don't want to say, want to say net profit, right? Net profit. Net profit. Let me put one table, one column there. Let me put one column. So it will be like this. Right. So we are saying when debit items are understated, net profit will be overstated. When debit items are what? When debit items are overstated, net profit will be understated. So the correction, right? The correction here. So if debit items are understated, net profit will be overstated. The correction we subtract. Then the correction here we add. Very simple like this. But it will become simple by using the correct source. You'll be thinking, say Rona kuti encourage kuti titenge book. Encourage kuti tenga book. Why? Because I know the benefit of the book. To be honest, zvimwe zvacho ngationesane zvechokwadi tisingadi kuwandirana. To be honest, you cannot get this information that I'm talking about. You cannot get it from any textbook. Go and check. What they just do, they'll give you an example like this. They'll give you answers. That's it. They don't even tell you how they are getting the solution, the answer. They'll just give you example, give you answer. Full stop. But me, I'm giving you example. And if you check this textbook, and there will be step by step, how I'm going to get the answer. Of which that's the part that you need. So most of the textbooks, they are designed in such a way that you depend with your teacher. Right. So after that, now let's go to the credit item. If credit items are understated, net profit will be also understated. Right? Correction, we add. Right? Then if debit items are overstated, credit items are overstated, net profit will be also overstated. Correction, we subtract. Chete. Kana wakaenda wakazotadza futi this part after waona video of understand, please wakandibata ndibate of wandisunga wandisa kuchikurupi. Usandinisa kuchakagona ndiendese kuchikurupi because ndoda kupedzera nguwa yako. But kana wakawerenga izvo of wabata and chibva watenga textbook. Right, thank you very much. In the next video, I'm going to do this example.